Well, big news yesterday hitting the markets with 50 stocks having been suspended. A market reaction to that news, and what kind of sentiment are we seeing on the ground right now?
Well, the sentiments, of course, remain negative. This goes back to what we mentioned a couple of weeks back when we said the removal of the management at the stock exchange actually leaves room for a lot of uncertainties. These are the kind of things we were talking about then. Obviously, it shows the weak compliance that has actually pervaded the Nigerian stock exchange over the last few years, where you have listed companies trading without filing adequate results and reports to the stock exchange, and the laxity on the part of the exchange in not enforcing compliance here. And we can see even the names of some major stocks being on that list, including African Petroleum, corn oil, and a few others like that. So these sort of things are the things that the new people at the stock exchange are putting in, and I think overall it will bode well for the market if we could actually enforce compliance, because the truth is that we actually have these regulations there, but we just need to enforce them.
Well, taking a look at the picture, I mean, there are just a few that are considered big players amongst this list of 50, Dangote Flour, African Petroleum and corn oil being amongst them. So what do you see this doing to trade and liquidity levels at the bourse? Because some saying it shouldn't have that much of an impact.
Indeed, that's true. If you look at the constitution of the Alshia index and the equity market capitalization, you find out that the banking sector actually contributes approximately 40% to those two indices. Then you move out of there, you go to the cement and oil services marketing sectors. So those are the key contributors to the Alshia index. Outside African Petroleum, corn oil and Dangote Flour, other stocks on that list are actually stocks that trade very low volumes, have a very small market capitalization. As a matter of fact, some of them do not trade for several days on the bourse, so it won't really have that much impact on the broad market.
Let's take a look at an oil player that does move the markets quite a bit, and that Oando. It's had quite a few supporting factors at play, and essentially what we're looking at is the direction of local policy content being key moving forward. How are you viewing Oando right now?
Well, in view of the progress Oando has made over the last few years, it is indeed obvious that it's taking full advantage of the local content policy. We understand that over the next few weeks, its OML 56 pipeline will begin operations, which will indeed increase production and its upstream activities. And recently, it's also been noted that the company is looking at listing just its marketing arm, essentially looking to operate the type of model you have your Total and Mobil operating in Nigeria, where you have your upstream activities totally separate from your downstream activities and separating the risks and so on and so forth. So obviously Oando is taking full advantage of that. Looking at it in terms of valuations on the stock exchange, it's actually trading favorably at single-digit PE, forward PE and price-to-book values relative to its peers like Total, Mobil and MRS. However, its net margin, we must mention, continues to lag its peers. So based on that, we think it was a good play for Oando.
Well, MRS is an indigenous player that, of course, bought Chevron's downstream business last year, and it has very similar aspirations to that of Oando, but it's not been gotten as far down the line as Oando has when it comes to achieving targets, right?
Well, you have to note that Oando started its journey way back in 2003, 2004, when it acquired Ajip and Unipetrol Nigeria. MRS acquired Chevron just last year and changed its name earlier on in January. So we wouldn't expect to see that kind of rapid. However, one strong point for MRS is the fact that at present it actually operates one of the largest gantries in sub-Saharan Africa, with a 14-arm loading for trucks, and actually dispenses about 12 million liters of fuel every day. And that's a kind of backward integration for the entire oil and gas group at MRS, where you have your stations having constant supply from the firm's gantry itself. So they don't really need to rely on third party for their supplies. They actually have their supplies ready-made for them.